Welcome back. Here's a look at where markets ended this holiday shortened trading week to kick off the new year. But the S&P 500 is coming off its best two-year performance since 1998. My next guest says get ready for another year of gains. Joining me now, Bullseye American Ingenuity Fund portfolio manager Adam Johnson. Great to have you with us. So
Thanks,
tell me why this market's going to just continue to rally.
Well, there are a number of reasons. We already have an economy growing 3%. We already have inflation that is coming back down to where we want it to be. 2% is the Fed's target. It's running about 2.5% right now if you average all the inflation gauges. We have the most number of people ever making the highest gross adjusted income ever, spending the most ever. That's generating earnings growth for the S&P 500 that I think will accelerate to double digits. And now we have an incoming administration that is finally business friendly. Right. Fewer regulations, lower taxes, drill baby drill means lower oil prices for everybody. And I think what it really boils down to for me, Jackie, as someone who runs the American Ingenuity Fund, is this is an administration that supports American ingenuity, American resilience, American strength, American security. And I think all those reasons are going to produce new highs.
Are you worried at all if the tax cuts, not only just for individuals, small businesses and corporations, aren't passed in the first CR, if they're delayed, that's going to hamper the speed of things? No,
I think there are other priorities. We need to secure the border. Yeah. We need to be strong to the eyes of the world, which are upon us. We need to unleash drilling. We need to get rid of all the regulations that are holding American businesses back. We can get to taxes, and we will, but I think it's about priorities. Taxes will come. So if it has to be two different packages, then let it be two packages. We'll get there.
Okay. Tech and AI, they drove us forward last year. Is that going to be the story in 2025, or do you see anything else up and coming?
Oh, it's one of the big stories. I have right now more semiconductors in the portfolio than I've ever had because the AI theme, because the compute theme. In other words, we need to figure out how to be able to do more with more to generate more. And the way you do that is by increasing the power of computers, from semiconductors to the wiring to the data storage that's behind it. So that's an incredibly powerful theme. Robotics, an incredibly powerful theme. That ties into artificial intelligence. Just look at what's happening with logistics. One of the companies that we own in the portfolio, Symbotic, is converting all of Walmart's 47 warehouses into robotic warehouses. Yeah. And think about that. You know, you don't need people to run these things. The lights can stay off. That saves electricity. But you do need artificial intelligence that helps you figure out how to get material from A to B in a smoother, faster manner without people doing it.
So you're bullish.
Oh, yeah.
There are some out there saying this market has run too far too fast and we might be due for a pullback or possibly a correction. Yeah. What do you think?
Well, we've kind of already had one, right? I mean, December was a little ugly. Some of the names in my portfolio were down a fair amount. That was in part because inflation kind of peaked its ugly little head up, and bond yields went up. And when bond yields go up, stocks tend to go down. So if you look at the S&P 500, we're down 5% in the month of December. For the NASDAQ, it was more than that. For small caps, it was about 11%. So we've already kind of had a little mini correction. I've done some buying because I think we are going to see new highs. And over the course of last year, by the way, we actually had 4 corrections of anywhere from 8 to 11%. That's just a natural part of what happens. I mean, people forget.
But you'd be buying those dips.
Oh, yeah. Well, look at what happened with NVIDIA. It had 3 corrections of more than 20% last year. Yeah. So you have to buy those dips, and you have to be willing to actually step in. That's part of managing money, right? It's managing risk.
Meanwhile, I want to get to this because it's a rare event in Washington. Senator Bernie Sanders actually applauding a proposal from President-elect Trump capping credit card interest rates at 10%. Sanders saying that he hopes Trump is going to support his upcoming legislation on this at a time when credit card defaults, of course, have been at their highest in 14 years. What do you make of this alliance, capping these interest rates? Things have been tough for consumers for sure. But as you mentioned, they've still been spending.
Yeah, people are still spending. Well, I am someone who believes that smaller government is better government. So I don't like anything that gets in the way of a free market. I don't like caps. Quite frankly, I don't even like tariffs. They get in the way of the free flow of goods and services. So yeah, capping interest rates, that to me doesn't sound appropriate. It doesn't sound right. It's government getting too involved in people's business. No, if your debt is too high, that's your problem.
Stop spending.
Stop spending. Don't turn it into something that now requires a government bailout. You know, the old expression, you know, any government that's capable of giving its citizens everything they want, in this case, caps on interest rates, is equally capable of taking it away. Smaller government is better government. No, we should not get involved with capping interest rates.
I hear you on that.
Yeah.
Great to see you. Adam Johnson,
Thanks
thank
for
you
having
so
me.
much. Happy New Year.
You too, Jackie.